Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We start out the day to take a look at the German DAX. You can see it had a sell-off, stopped exactly at old Mr. Fibonacci number 618 last night. We're going to see how that ends up. If we take a look at the FTSE, we did pretty much the same thing in the FTSE. So far, they've held up. The end of the world has been put off for another day or two. The rumors are abounding, folks. 151 people have died in South Korea, supposedly. I don't know any of these numbers. All I know is when the airlines start telling you that they're stopping traffic, you better pay attention. That's the main thing that you want to keep in mind here. It's very important. We finally found some surgical masks for the family over in Hong Kong. Our dentist had some for us, and so we were able to send those. They're nearly impossible to find, and the good ones anyway. The other ones are a little more easier to find, but they're not as it's not as efficient. I wanted to walk through the gold market with you folks because I just wanted to give you an idea of what's been going on in the gold. As you already know, our good friend Mr. Z has been in the gold market for quite some time, and I wanted to post the chart that he had in here sent out to me, and then I'm going to expand on it just a little bit. Okay, Dennis is asking the question. It takes 7 days, my friend. Takes 7 days to get it over here, and it's about $40. That sends about 400, about 300 or 400 masks we can get for about $40. See, the problem is the Hong Kong Post Office is not delivering. No, it's not. It's United States Postal Service. UPS won't deliver. Neither will the Hong Kong Post Office. So it's the U.S. Post Office that takes it over there, and they have a contract with them, and they have to deliver it. So it takes about 7 days, and it's not too bad. What you hear in the news over there and what you see in the news here is just totally. It's just not right. I don't want to get into that because I got a lot of stuff to cover. Let's talk just a little bit about the gold market. Okay, here's what I was watching last night in the gold. If you remember, we've been putting out this. I use a 4-hour chart in gold because it shows about the best patterns you can look at. You can see there on February 12th down there at 1560 that we have. We made a nice little Gartley pattern there, and if you recall, I kept saying 1595, 1595, 1595. 1595 was so important because all you have to do is go over, look at 1595, and look over to the left, and you'll see a little expansion number there of 1.618. When it gets above that, folks, it's blue sky. All you have to do to prove it yourself is look last night. You see the 1.618 right there? Look at that. Boom! We took that out at 1626, and the market just kept going up and up and up. And so I was working with Mr. Hugard last night, and we were talking about this, and we said, well, there's a chance here because we were looking at the artificial intelligence program just to see what the heck it was doing. Sometimes it's right, sometimes it's wrong. You never know. But this is what it was saying. And notice here, you see where that 1628 was. That's where the buy was because it broke out above the 1.618 at 1628. I mean, there's nothing but blue sky above it, and you can see it was not supposed to top for well over 2 hours. And so we kept following it, and sure enough, look what happened. We get up here right around the actual high. I printed this out right before the high because the high was at 1639. It went up another $2 in that next bar, that next 2-minute bar, and then it went sideways. The biggest sell-off it had was $5 during that time. But the reason why, let's get back to this big chart because this is the real key to what's happening in the gold market right now. My opinion, of course, take a look at it. You'll notice here that the market cannot get any higher than 1647 today, folks. It's physically impossible. Do you know why? Because that's all I got left on my chart. 1647. Anyway, from the low down here at 1551 to the high we made today at 1547 was 3 harmonic numbers, folks. That's 3 standard deviations. For it to go past that, look out, because it could really run. So anything above 1647 is going to be a, and remember, the long-term pattern on this says to 1750. In fact, Paul Tudor Jones was looking at 1750 on that also. Platinum has been lagging. It backed off a little bit and held some support. Silver's picked up a little bit, but both of them are lagging badly compared to what we're seeing in the market for the precious metals, at least that we're looking at today. Now, I wanted to mention we had Mr. Hugard on the line here, if you recall, this past week, and he talked to us about these patterns. I'm not going to bring all of them up because I know many of you have asked me to send them to him, and I've done, and that's all I got left on my chart. Okay, let's take a look here. This is chart number 90. Remember, everything was based on these 72-week cycles. He saw them in 2001, 2, 3, 6, and 9, and he's saying it the same thing now, and he's saying there's a possibility that this could happen. Well, so far, that's what's been happening. And remember, we made that perfect ABCD in the S&P up there at 33.97, and that is held so far. Let's just look at this from a standpoint of where we were here when this market was topping. If you'll get a chance here, we'll take a look at it. You'll be able to sacre bleu. I shouldn't use that kind of language on the show here. All right, let's, what is that, Spanish? No, that's French. Okay, take a look. Here's the NASDAQ. You'll see the big ABCD pattern. It went a little higher. The S&P went exactly to the number. We've already showed that. You can see how the market broke down, and we rallied back up into this area here. We should, if it's correct, this is a Friday in an up week, but if we close down this week, this is going to be a real interesting week if we close down. And the reason why is the fact because it would be a key reversal week. In other words, a higher high and a lower low, and it's an outside week. And boy, that's a very, very tough technical picture to get around. Now, I don't know if that's going to be the case or not, but we'll have to let it aside. Remember, we had a lot of divergences. Well, not a lot, but we had some divergences, and we pointed those out in the work from the Aiden sisters. We'll get this up here, and you'll be able to see this. And I have to have a little addendum here to what happened when I was in Hong Kong with that meeting for the gold group back in, I think it was March or June. It was in the spring of 1980, and I was there, and it was Mark Faber putting it on. He wasn't doom and gloom at the time. He was running the Drexel Burnham commodity department over there, and they had a beautiful office there, and they had lovely chairs. And I have to finish this story, but I was there for about 5 days. I traded during the day and went, nighttime because of the difference in time. I could do that, and so I would be, and there would be other traders in there, and I met a couple of traders. I have to tell you the funny story behind it because it is a funny story. We'll get right back. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, here on the. Hi. Oh, okay, folks. Let me get back to you here on the. That's Carlos called in. I wanted to tell you the story about when I was over there in 1980 at the Drexel office. There were about 12 beautiful leather chairs in there. This is sort of like a boardroom where they had the Bunko Remo boards, and I was, pretty much alone. I didn't speak Chinese. I was just there to, listen to the gold speakers. I gave one small talk about 45 minutes, and I was sitting in the backside at the very back of the room, and I was using proportional dividers that John Hill had given me, where you measured Fibonacci number 618, 1.618, and once a couple of these young guys came over and said, "Gee, what are you doing?" And so I started showing them, and they had no idea what that stuff was, and it was one of the. I was looking at a couple different things. Sugar happened to be one of them, and gold, of course, and silver. And I was showing them the rate retracements. They thought that was really cool. And then this older gentleman came over. Remember, I'm in my early 40s. I'm in late 40s now by then. This gentleman came over. He was probably in his early 60s. His name was Mr. Wu. I did not know that he was Mark's biggest client. I didn't know that. And anyway, he seemed to be very interested, and so we went to lunch. And then the next day, he invited me to dinner, and then he asked me to give a little talk to his boys for a couple hours, which I certainly did, no charge. And he happened to have a monster position in sugar. I mean, a couple thousand contracts, and boy, was it topping. My gosh, it had everything you could possibly ask for, 1.618 expansions, everything. And so I said, I wouldn't be long sugar here. I said, this is getting ready to take a really big. I'd rather be short than long. And so what happened was Mr. Wu, he sold all of his positions and reversed and went short. And we got a call here from Georgia. Will, are you on the line?
Yes. Hey, Larry. Thanks for taking my call.
Yes, sir. What can I do for you?
Well, I just wanted to see if you could mention those fears or rules of trading you had mentioned some months ago, and I meant to jot them down when you mentioned them some time ago, but I just thought they were really great, and I just thought it'd be worthwhile just to hear them again because, in helping to get the right mindset in trading and whatnot, I just find your insight invaluable. And so I just want to see if you could mention them again if you get a chance.
Sure. How about this, Will? Why don't you email me, larrypesavento@gmail.com, and I'll send you a picture of the oil painting, and they'll be listed right there. It shows the patterns that I used to be using, 100 years ago, 40-some years ago, but nothing's really changed. But I think that's the easiest way to look at it. The other way, if you read Jesse Livermore's books, many of my rules come out of Livermore's book, for sure. And so that would be the easiest way. I could read them to you now. Let's just do them very, very quickly. Oh, my goodness, my eyes are getting so bad I can't even see it here. Oh, well, the first one is when in doubt, get out. That's the first one. The second thing is, gee whiz, hold on just a second here. It's so dark in here. Okay, never add to a losing position is number one. Number two, when in doubt, get out and stay out. Number three, plan your trading and stick to it. Number four, take equity out for rainy day periods. Never close a trade without a reason. Stops are placed for protection. Use them. The only true facts in commodity trading are fear and greed. And it says a P.S. under that, unless you're listening to CNBC. Oh, number 8, never allow a substantial profit to become a loss. Distribute your risk equally over several markets, and never hedge a losing position. That's where if you long something and you hedge it against something else, hoping something will happen, that's never going to happen. So if you'll send me an email, I will forward that on to you, and anybody else that wants it, I'll be happy to send a picture of that. So many people have been here to visit me, have taken pictures of that thing, and it's very special to me because Elsie was the wife of one of my dear customers back in the gold days. So I hope that helps, Will.
It is great. And thank you again for all you do, Larry. I really appreciate you. I listen to you almost every day, if not live and on the car. So thanks again for everything, Larry. I hope you have a great day and a great weekend.
Thank you, Will. I certainly appreciate the kind words. Okay, finishing the story. Yeah, okay, I'll finish the story now. Everything was okay. I get back on the plane. I was there about 2 weeks. I took a little bit of time off to see China. Get back to the office on Monday morning, and lo and behold, I've got the director of the West Coast Drexel operations sitting in my office at 6 in the morning. I said, I'm in trouble. I thought I'd made an error in trading. And I said, I said, what's going on? He says, you've caused a lot of problems, young man. And I said, what's that? He said, you're trying to steal customers from one of the Hong Kong brokers. I said, say what? And he said, and I said, that's bold only. I said, I never stole anything. I never did anything. I never, I said, I went to dinner with the guy and lunch, and I said, it was very pleasant. He did give me a Rolex watch when I left, which I still have, but I never did anything to try to do that. And Mark was very angry with me. He didn't speak to me for several years. The only way I got out of this was we had to go to Tubby Burnham, John Burnham, one of the owners of the company. And he knew who I was, and fortunately, my boss was a very dear friend of Tubby, and that's what got me off the hook, because they really thought that I was really trying to sit over there and to take the customers, and I had nothing to do, and I never did. That was the bottom line. He never took a customer from anybody. That's robbery. So anyway, that was it. It ended up okay over the years, but that was a little scary when I walked in that morning and saw the dude sitting there. Okay, let's move on to a couple other charts that we want to take a look at here. The dollar index, folks, has got hold up here. We got another question coming in. Let's see what it is. Mr. Z's asking, how well do I know Richard Dennis? I don't know Richard at all. I've met him a few times. I was at a baseball game with him, a Cub game with Byron many, many years ago, but I don't know him. Back in 83, when he was 83, 84, when the Turtles were going strong, I had met a few of the guys. And, the sugar trade turned out to be a total home run. Sugar went from, I don't remember the exact prices, Jim, but it dropped way more than in half, and fast. I mean, it was instant. In fact, how instant it was when by the time I had left Hong Kong, it had dropped $2,000 a contract, and he had 2,000 contracts on. That's 4 large guys, so you can see what that is. See what's going. All right. Okay, let's move on to the next one here that we have here. We want to talk a little bit about this dollar index because this chart is not quite up to date, but it's close enough for what we're seeing here. We've gotten above the 1.618 number, folks. We're trading at that number right now. We got up to 99.90, I believe. We're trading right now at the 1.618 number. So that tells us that the euro is probably starting a little bit of a rally here. Remember, it's been down every day for so long, you just don't really know. The other one that's really interesting that could be related to the stock market too happens to be this one here in this Japanese yen, because it is really trying at major support down here. We had a number at 89.40 and we got down to 89.23. We're trading around 89.60 right now. It hasn't really moved very much, but that's what we're paying attention to as we see this. We've got to pay a few bills here, I believe, and we'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, boys and girls, we need to pay attention to something here because we have a lot. Oh, that's not the right one. Hold on just a second. I want to talk to you about the natural gas because it has really had some huge moves here overnight. 1 second. Sorry. Just give me 1 second here. I've got the chart up, a little frog in my throat. Let's get this chart up so we can take a look at it. You'll notice here the natural gas yesterday got as high as 203. Remember, folks, we were looking to buy that down there at 176, and it went to 203. That's a big move, but look at to the left there. Look at the number of ratios that were coming in. A 1.27 expansion, 1.414, 1.618, right up there. And we dropped from 203 all the way down to the 61% retracement this morning, down at 186. We've rallied a couple bucks from there. So it's really important that this does not get below that 186, because if it does, this is telling. And we went into the gap. You see the gap we had there at the 16th? We filled that gap. This has the potential to be really, really bullish. So watch that one, folks. Remember, long term, we think this has got a chance to really move a long way. But like we say, it's a chance. We don't know which ones are going to work and which ones don't. Regarding the gentleman that called in from Georgia, Will, those rules that I have, those were on little pieces of paper, and that John Hill and I had worked on, and some of them I got from the old books, of course, but most of it came right out of the Livermore book, because I had read the Livermore book. I've read that book at least 50 times, and but that's a good way to look at that. But those are the rules that I have, and if you do want a copy of that painting, I'll send you, the picture of what it looks like. It's larrypesavento@gmail.com, and we'll see what's going on. Bill's telling us that the seasonality for national gas here is negative, I guess, and I think that's important to look at. Another one that I think is really important to look at, and that is, if you remember, we had Shane on the line just the other day, and I want to bring up this solar gold cycle, because it really is interesting in the way that we're getting these moves in gold today. It's indicative of this type of a top coming in, especially when you're not seeing confirmation from the other commodities like silver. Silver's moved somewhat, but not like gold, and platinum too, but not very much. But the date that he was looking at was around the 18th, and here we are on the 21st, 3 days out. And just let's be watching that, because there's going to be real interesting to see if that's going to be to see what's going on. Mr. Z just posted something about KL. I don't know what KL is, Mr. Z. I wish the heck I did. Maybe I could see it. I can't. So I know it's met the target. Folks, the targets on these things, they're there for risk control. The patterns work, but they don't work all the time. And all you have to do to prove that to yourself, if you like mathematics, is to get Andrew Lowe's book, The Non-Random Walk Down Wall Street, published in 2002. And it's about 700 pages of the most complex mathematical formulas that you could ever see. Most of you guys, won't be able to get it, but me being the astute mathematician that I am, this was really a piece of cake for me. I mean, it just breezed through that book. I got to the foreword, and I sent it on to John and Howard Arrington. Okay, let's take a quick look here at the Bitcoin is still doing okay. We're still in this corrective phase. Has not done very much, folks. If you take a look at, it's a gold miner. Okay, that's good. Look, you can see here we've had a little bit of a pullback here. It's taken 2 weeks, folks, and we've only dropped $1,000. I mean, that's really, really bullish. Kirkland Lake Gold. I don't even where Kirkland Lake is. That's a gold mine, but if it's an ABCD, you know what your risk factor is. If it gets much past point D, 10%, you know that you're probably wrong. It's all about how much money you don't lose, not about how much money you're going to make. That's the real key to learning what you're doing. That's very, very important to remember that. That's super important. I did want to talk about the bonds a little bit. I posted the chart here on the bonds, and as you can see here, folks, we are setting up. We're setting up in the bonds right at the 78% level, folks, in the Treasury bonds. It's a very, very important. Let's get up here you'll be able to see it. you'll be able to see it here because the price you'll not be able to see, but I'm going to tell you what the price is. You'll be able to see. We hit 165.02 last night. The 786 number is 164.29. So if we go crazy above that, then that tells us that we're getting ready to probably go, a great deal higher. And I do have that Treasury note chart that I wanted to bring up. Oh boy, I get so many charts for you guys. I just can't put them all in order, and that is very frustrating to me. But that's neither here nor there. We'll move on to the next one and not too worry about it. But we are close to taking out those highs in Treasury notes. So one of the questions that someone asked me this morning by an email, well, how do I handle this news? I try not to listen to any of it. I mean, I get feedback from people and I get emails, telling me all the things that are bad and everything. Some of them, I look at, some of them I won't. But, I really don't trust I don't trust anybody anymore, folks. It's just that the news is so bad out there that it's just amazing that what's going on. I mean, it's just truly amazing to me. So that's all I can tell you. Amazing, amazing, amazing. That's all I can say. Here is one that I wanted to mention here because we were doing about the Japanese yen. This comes from our good friend, Tom Hugard, and I wanted to bring it up because he happens to have a very, very big position in this. This happens to be the dollar yen. And you can see the stock market. You'll notice that the black is the Dow Jones, and you can see the red is the yen, and you can see there's a very high correlation between this. And you just can't. There's a period that you can see that during 2003 that was off a little bit. Look how far off it was during 1998 and 99. I believe that was due to the dot-com bubble. But look what's happened here since quantitative easing. My goodness, that's been the biggest thing to look at, and we're setting it. We're setting at death's door on this Japanese yen, folks. We really are. We had a big volume spike in this stuff yesterday on foreign exchange. It was one of the largest ones in several years in that foreign exchange, and that market didn't even move at all. So there's a giant battle going over there for sure. So keep an eye on it, because if that thing pops up, that's going to be a big interesting one to really watching. So we'll watch that as we go through. The crude oil acting very, very nicely. If you remember, those of you that belong to 24/7, we sent out that beautiful ABCD pattern that we had in crude oil. It came in at 54.40. It made the first objective last night at 52 at 290, I believe, and we're thinking it's still got a long way to go to the downside. So hang in there if you're still looking at that one. Those of you that are long the gold from 1795 on that breakout, just hang on, because you don't know where it's going to go. The big increase in open interest yesterday, and I'm sure there's going to be another one today. This is a breakout, and if we get much above 47 or 1650, that's more than 3 standard deviations, folks. That is going to be, you could accelerate $100 an ounce just in a few days to be at 1750. So 877-927-6648.
The Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. I posted a chart that Shane sent on to us, the Wolf Trader. It's about a solar cycle looking at it from the eyes of the euro. I wanted to bring the euro chart up so that you folks can take a look at it because we've been watching it for quite some time here. And I wanted to show you because this is where we were last Friday. And let me get this up so we'll be able to look at it. You'll be able to see that what we've done now is we have gone down, and you see that 1.27. That's been the low so far, folks. We've not gone below that. That's very, very important. That's a big ABCD going way back from July down to September up to January, and that figures at 107.70. Anything below that means you're probably going to go a whole lot lower. But that is a completed pattern, and we'll be updating that over the weekend to take a very, very close look at that. And of course, the dollar index is up in that area of 99.60, which is also important. Remember, we look at the patterns is what we're watching. Stocks are weakening again. It looks like Tom might be correct on this 72-week cycle because it certainly pulled everything out of the wool. And not only that, but we're seeing mixed reports. Here you have the Chinese government has opened the Macau gambling casinos. Starbucks has opened some of their stores. The airlines are not flying yet. And then there's 151 people that died in South Korea, we heard on the news today, if that is the case. Terry's asking a question in the natural gas as a chance to add your position. Actually, I took some of that off at 196 when it broke below that. And so what I did, I don't know. I don't know, Marshall. I don't know if there's going to be a crash on Monday or not. If you bet on that, I don't know. All I know for sure, well, nothing for sure. If we close below 33.35 today in the S&P, and we're around 33.46 or something right now. If we close below 33.35, that is going to trigger something very, very interesting because that is more than one standard deviation from the mean. And this is how they price options. And folks, 2 standard deviations from the mean, that's another 50 points below that. That's big trouble. That's when crashes happen because the options market, which is much, much larger, many times larger than the futures market, and the problem is the leverage behind it, you see. And if they're on the wrong side of that, they have to cover. That was part of the reason what happened to the crash during 1987. And believe me, there's a lot of reasons we could have a crash. You don't have to have You don't have to think of any. There's a lot of them out there. But don't try to do that. I wouldn't want to do that. Let's take a quick look. What's beeping here? Oh, the notes are breaking into new high ground. That's another very interesting one to take a look at. Hold on 1 second here. I wanted to know when that happened, and now the yen's starting to move too. That's good. Hold on just a minute, boys and girls. So I can turn this off. Oh God, it's making lots of noise. Here we go. Yeah, we just made a new high in the notes. We just took it out. Let me get this up here so you can take a look at it, and you'll be able to see what I'm watching anyway. But this market's acting like something's not right in Denmark, and we're not even in Denmark. So let's take a look. Oh, Ruby's asking, how did the markets handle the crash, the commodity markets? Gold was strong. Gold was limit up for a day or two, but the big one, Ruby, was the bonds. The bonds rallied 11 handles. And the high was long bonds and short S&P coming into that day, and the bonds were only down a half a point. And in retrospect, I was more concerned about getting the money out of the commodity firm than I was anything else, because it was so crazy and it was just looked like the end of the world, and it was for one day. But the rest of the markets traded relatively well after that. It was really not too much. And, of course, the day after that, that low, folks, on the 20th of October, 1987, was an exact 61% retracement. I mean, to the 000 number of the low from August the 9th of 1982, 5 years earlier. So these numbers really line up. And remember, in 2009, that low of 6440, I believe, in the Dow Jones was also a 61% retracement of a previous low. So they do work, but not all the time. So we're starting to see an acceleration here in the bonds, and that's a very big thing. And the euro's starting to move now. We're moving up 102.80. We're moving strongly now in the Japanese yen, which makes everybody happy here. And we're down to 33.40 in the S&P, folks. We get below 33.35, it's going to be pretty nasty. That's the way it looks like from the cheap seats here. So we'll take a look at it. Let's take a quick look here at what the AI program is saying for today, and we'll see if it gives us any indication of what the market might be doing. And remember, this is just a sophisticated swag. You know what that is. And we'll get this up here to take a quick look at it, and I'll bring it into the room here, and we'll see what it looks like. Looks like we're going to have a little bit of a negative day. Anyway, let's get this up here. Okay, let's move it up, and we will post it in here so you can take a look at it. Yeah, we're going to take out those lows. They're heading for those stops right now. I mean, look at this. We've dropped, folks, in 20 minutes, we went from 33.60 to 33.40. We've dropped 22 handles. That's what we dropped to hold the other day. So that must mean there's an ABCD out there somewhere. But there's a monster low there at 33.35. Taking that out, and we should take it out by 10:30, then have a little bit of a rally, and then watch that rally at 11:30. And if we don't get much of a rally, then it's going to be pretty nasty. We'll be able to see. Gold is popping up, making new highs now, 16.49. This is not going to be able to happen very much longer because it's over the top of my page. They're going to have to put a new page in for me. Got the bonds trading at 65.13. This is all part of a flight to quality, folks. The people are getting scared. That's the main thing. Natural gas moving good. Thank you, Mr. Z, for heads up on that one. He posted it in this morning at 186 and change. It's now 500 handles, $500 higher at 191.30. Boys and girls, today is a big event here in the Old Pueblo. I won a little tiny poker tournament here at the casino a few weeks ago, and one of the prizes I got was a night at our luxurious hotel, our luxurious 2-star hotel, and Sarah gets a day at the spa, and we get a free meal. But the most important thing is we get a free entertainment tonight. Charlie Pride, the old Tennessee Cowboy, is going to be presenting his show today. He's 85 years old. part member. He owns 1% of the Texas Rangers. He used to play for the St. Louis Cardinals. He's one of my favorite country and western singers, and so we get to see his show tonight, which is really great, and we got good seats, so we're looking forward to that. So that'll be fun to do. Okay, that's enough of the tidbits here. Any questions? 877-927-6648. Unfortunately, Al said the lines are so jammed. They are so jammed that we're only able to get one caller in today because it was just bedlam over there in St. Petersburg. Okay, folks, don't worry about a crash. I mean, look, this market. Do you think the shorts aren't scared to death? In 5 minutes now, somebody could come out, or less, someone could come out and say something, and this thing could be making new highs. So just be careful of what let the charts tell you what to do. All I can say is if you go below the 33.35, that's more than one standard deviation. That's a problem. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're still rocking and rolling here today. We've got that S&P still trying to hold the 33.35 level. Pay attention, folks, because if it goes below that, that is more than one standard deviation, and that's when options people have to get in. Remember, that market is huge. It has leverage, and when that leverage goes the wrong way, they have to cover. And that's the whole key to what you're looking at. So pay very, very close attention to that. We had a new high in the gold up here at 1649. Right at the top of my page. So far the page is holding up all right, which is good. Make sure all you folks have a really good, wonderful weekend. And what we're going to do on Monday is we're going to review some of these future markets. We want to look at hogs, and we want to look at a few of these. I do the letter each week, but I want to do some things to show you some of the patterns that we're seeing a little more clearly, because I don't get to do all of them because we focus so much on some of the currencies and things. So let's sort of pay attention to that as we look at some of these markets as they're trading today. The bonds are still way above the number. Notes are just broken out. So something is in the works, folks. The market is telling you something is different. Something is different. These markets are getting very, very jumpy. Stock market weak, gold strong, bonds and notes strong, flight to safety. There's news out there. Fake news or not, we don't know, but it's news, and somebody must know something, and they certainly haven't told me. I'm always the last one to know. So remind yourself that you don't have to be a reporter. Just follow what the charts are doing. If prices are going up, there's more buying. If prices are going down, there's more selling. That's really all you have to know. There's nothing any more difficult to look at than that. That's pretty much, what we're looking at. So far we moved up about 40 pips. No, up quite a bit more than that. On the euro, so it has telling you that U.S. dollar has turned a little bit, and the key word there is a little bit. We'll cover that in the newsletter, of course, to get you better informed of what the next move might be here, because these are really, we live in interesting times, the old Chinese curse. So let's try to remember that.